Look, a lot of the work we do is in the US, and the view from the US on the euro market, so they're from a currency point of view, they're cheap. And also we're moving through, I mean, if I step sort of above that, one of the massive differences in the world is the view on where the market is. In the US, you get a mixed picture using their analogy of which inning they're in a baseball game, which is 9 innings total, by the way, in case you don't know. But you hear from a variety of sources whether they're in the 5th, whether they're in the 7th, whether they're even later than that. So there's a real mixture of views. I think in the UK we're probably just behind the US mentally, and I think in Europe it kind of hasn't. It's happened from the cycles happen from a yield point of view, but not from a rental point of view. So I think there are very different views around the world. But going back to the question, from the US point of view, the Eurozone is cheap. UK less so. And I think there's more US money going into continental Europe now than, say, 2 or 3 years ago. There's still US money going to the UK, but very, very focused on value add only. It's a little bit more balanced in continental Europe, but I don't think the currency. If you ask the US investors, they won't immediately refer to the currency, but the currency helps. The fact that euro is so cheap and almost at parity with the dollar.
So that might encourage people to look more at opportunities in continental Europe rather than the UK. Do you think that's why there's the value add? Kind of look at the UK, or do you just think that the UK is a little bit oversold in their view?
Well, the UK's got certainly London's got a safe haven dynamic that not all of continental Europe, 1 or 2 of the bigger cities have got, but the UK's had that, London's had that, and it's rippled out. So there's been more capital compared to the size of the market here for longer, and so that's had an effect. The overall view of where the markets are, it almost goes for every market. The low-hanging fruit, the buy a shopping centre in Spain and wait for the cap rate to improve, that's done. So we're now back to fundamentals. And if you look at the fundamentals, is the economy growing, which regions will grow, then the UK is a more believable story for investors than most of continental Europe. But fortunately, the pricing's slightly different, which encourages some investment also into the sort of those areas of continental Europe with the best fundamentals. Principally Germany, but spreading out from there quite rapidly. You've got other aspects, France, economy, politics. Sadly, what happened a couple of weeks ago there makes people pause. But Spain and Portugal, for instance, all about fundamentals now. Will actually rents be sustainable or grow? And just going back to one other point that was made earlier, I think you've got to look at euro per square metre value and in a way not ignore yields, because yields are a cycle, totally get that. But the value per square metre is the critical metric. If you want to look back at 2007 and compare the two, then Europe still looks relatively cheap, with the exception of 1 or 2 markets, principally London, which are almost there or past.